Starting off with our next leader, our very first leader who's here to educate us all about Indian markets and growth. Give it up for Mr. Sir, as and when I take your name, we request you to kindly come on up. Mr. TIRTHANKAR PATNAIK, the Chief Economist, National Stock Exchange. Mr. Patnaik is the Chief Economist at the National Stock Exchange of India. With over 20 years in Indian capital markets, he leads research in macroeconomics, finance, and ESG. Previously, he has held leadership roles at Citibank, Religare Capital Markets. My God, super duper heavy. Dr. Patnaik holds a PhD in high-frequency finance from IGIDR and has contributed significantly to academic and corporate research. With a big round of applause, can we have Dr. Patnaik on stage with us? Dr. Patnaik, the stage awaits. And sir, can you see the magnitude? We say the magnitude of the event is dependent on the sponsor, but the magnitude of the segment. People are standing for your segment, sir. This is the love, and this is the respect that you want. Fantastic, sir. Thank you so much for your presence. Stage is all yours. Thank you.
Good morning, everybody. Thank you, Nikita. That was electrifying. Thank you so much. I noticed that there are a number of speakers down the, through the day who are going to talk to you about a lot that you're seeing here in this massive expo. There's a lot that's happening in Indian finance. My role here is to talk to you about the big picture. As an economist, I generally look at the very big picture because I often ask myself in Hindi, kul milake, you might have heard that meme, bhaiya keh kya rahe ho? That's the point I'm trying to see. So my short talk here would be about what's happening with India, what's the thought process, what's the big case for India, and that's it, the macro case for India. And I'm going to show you some numbers, and obviously, I'm not going to tell you to buy. That's not my role here, but I will let you form your own conclusions. So, short and sweet. My presentation here has 4 segments. This is the first segment. What's happening with the global economy? So, contrary to what most people think, we seem to be in the global economy in a confusing place even now. Global economic growth is likely to be around 3.2% for this year, where you can see the major contributors: China, Germany, Japan, India, UK, US. These are the large economies. Everybody now knows India is the 5th largest economy in the world, and pretty soon likely to be the 3rd. And global inflation, that's the big worry for global markets. How big is the worry? You saw in the first week of August, after months of the one-way ride for the markets, things suddenly started looking not so good. That's the worry about global inflation. What's with global inflation? Numbers in the US, we saw 9% inflation just 2 years back. When was the last time we had such inflation in the US? In the late 70s. Yeah, that's how far back things were bad. So this is not something markets have seen in a long time, and therefore people don't really know what can really have, what's really in store for us. For Japanese markets, we saw them earlier in the year reaching lifetime highs that they had crossed in the late 80s, and then we had a fall which took them back to 1987. Yes, the fall that was the biggest fall that they had since 1987. So global inflation right now is eased, but it remains quite sticky. And geopolitical tensions are there. I don't need to tell you about what's happening in the world today. We have 2 major wars going on. I mean, if that was not bad enough, geopolitical tensions between great powers is something again. So we've not had a unipolar world for the last few years. We had that for almost 30 years since the end of the Cold War. That's again a geopolitical tension for you. And global debt levels are seriously rising. After the pandemic, when everybody poured money big time into the markets, debt levels have gone up, and after that, we've seen many major economies and some minor economies land in trouble because of debt. We saw what happened in Sri Lanka as an example. In all this, India shines bright. In all this, India shines bright in an uncertain world. I have just a few numbers for you. Our growth there, you see 3 columns there, all above 7%. No other large economy in the world is growing at 7% plus at all. And this year, the number is 7.2%. So India will become the largest, I mean, the fastest growing economy in the world for the fourth year around. At this scale, there is nothing that beats India in terms of growth. So you saw 9.7%, 7%, 8.2%, and 7.2% for this year. This is the India growth story for you. Headline inflation. I just told you in the last slide how inflation is sticky. It's down but not out. You have trouble on inflation globally. But in India, inflation is under control. The last number that we saw was 3.1%. This is likely to rise in the next few months, as the RBI says, but still remain well in the 4 plus or minus 2% band that we see. And proof of the pudding, look at the rupee volatility on the last chart. You see volatility of most currencies in the world over the last few months, few years in fact. And the thick red line is the rupee. See, that's how stable the rupee is. We keep thinking rupee is going to 84 and so, but when you compare it with other currencies, rupee is remarkably stable. Yeah. All right. Now, I told you about what's the global economy, and secondly, now I'll talk about what's the Indian economy and outlook. Can I just say next slide and you change it? Makes this much simple. Thank you. Thank you. So what's happening in India? Couple of things have been happening in India. Look at the capex that the world is doing. For anybody who's tracking the markets, one of the things that we always worry about is where is private corporate capex? In India, private corporate capex has not been, growing as much as we have liked, but government capex, look at that growth number. FY11 as a percentage of GDP, less than 2%. Today, that number is significantly rising. In fact, the number is about 11 lakh crores. We call it a nice number, 11.11 lakh crores. That's the kind of capex that the government is doing. It is 3.4% of GDP. The current account deficit, everybody, many of you are young here. They may not remember 2013. We were part of the fragile 5 at that point in time. Our current account deficit went to 5% of GDP. Look at the trajectory of the current account deficit. So today, current account deficit is not so much a problem for us. And I don't know how many of you have been seeing the markets for a really, really long time, but in the early 90s, I remember India, we had to send our gold to Bank of England because our forex reserves were about $1.2 billion. They were enough to support just 2 weeks of our imports. Look at where we are today. At 667, no, this number is 675 today, it's still rising. We have the 4th largest forex reserves in the world today. 4th largest. So India is far, far ahead, far, far away from that point where forex reserves were a problem and therefore the external account was a problem. And the other thing that one has heard over the last 10 years is the twin balance sheet crisis. A lot of you must have read about it in the newspapers as well. What's the twin balance sheet crisis? You have banks which have high NPAs and therefore cannot lend anymore. You have corporates which are not doing well, whose balance sheets are highly leveraged and they cannot borrow anymore. So this was a situation we've had for a fairly long time. But look at the gross NPA numbers for the banking system. The numbers have been significantly going down. Indian bank balance sheets are not in the shape they were in even 5 years back, significantly better off. So across all these metrics, India is doing rather well today. These are so-called macro-prudential cases that we see to judge a country. You saw the proof of the pudding in the way rupee has behaved. Next slide, please. So what's happening for India? I pointed out that India this year, if it does 7+%, and highly likely that it would, India will become the fastest growing economy in the world, large economy in the world for the 4th year in a row, 7% plus. And that's the sort of growth projection for India in the economic survey. And India's nominal GDP will touch $5 trillion pretty soon. What's the growth strategy? The idea is to focus on private investment. The idea is to focus on expansion of our MSMEs. There are 6 crore MSMEs in the country. They contribute to about a third of our GDP growth today. We have to finance for a green transition. Everybody remembers our Honorable Prime Minister's commitment to net zero. In the world, climate transition energy transition is not happening unless India takes part in it. Let's keep that in mind. India is the world's big opportunity. It is not any other country. If India does it, then the world will follow, simply because we have that scale, we have that size today. In most of the world, the idea of energy is literally energy transition, because their energy equivalence levels are fairly high at this point. They have to substitute energy. In India, thanks to our per capita consumption of energy being fairly low, for us it is growth, whereas in other places it's substitution. And of course, this is the biggest problem for us today, bridging the education employment gap. This again is a major problem for us. We are 1.4 billion people, 140 crore people. We have 60 crore people in our workforce. 60% of them have not passed 10th standard. I know none of you are in that scale, but this is where the world is for us in India. Next slide, please. Obviously, I can't just speak about the macro. I will speak a little bit about where the markets are today. Next slide, please. So yeah, simple numbers. Indian economy is doing better. The Nifty's 20-year CAGR is 13.5%. You can compare that with major markets across the world. I did speak about the Nikkei 225 some time back. Its 20-year CAGR, even after all this growth, is about 6%. The emerging markets, China is about 2% today. All emerging markets about 3.9%. Nifty 13.5%. I'm not even talking about the small cap here, the numbers are higher. This is the sort of growth. And yet, India's market cap to GDP number at 130% is significantly lower than other countries here. USA, for instance, has a market cap GDP of 1.9x. So for India, 1.3x. I mean, there's a long way to go, even now from these levels, from a market's size perspective. Next slide, please. All right. So who's participating in the India growth story? Who's participating in the India macro story? There are three major segments in the slide before you. These are foreign flows, these are DII flows, and those are retail flows. So foreign flows is something we talk about often. Foreigners are coming to India, foreigners are leaving India. Foreigners come when they see growth opportunities, foreigners leave when there is fear, when they notice that global environment turns a little anemic. But domestic institutions, these are mutual funds. Mutual funds, can you imagine the kind of money that mutual funds have been putting in India? Compare that with DMFs. The point here that I'm trying to make is the money that mutual funds have been putting in India is significantly larger than what foreigners have been taking out of India or even have been putting in India. All these numbers are in US dollar billion numbers, and that is coming out of household savings, which is suddenly seeing some allocation here over the last 2 to 3 years. You can see the significant amount of capital. And beyond what people are putting indirectly, is this, at the last slide, is the capital that we as households are putting directly into the markets. So 2024, this year, $12 billion have come in just from Indian households, not even from mutual funds. This is the capital that Indian households have put into the market. Compare that with what foreigners have been doing. So roughly 3 times what foreigners have been putting into India is what has come from Indian households alone. Next slide, please. Mutual fund sahi hai. We know this. The average AUM for the mutual fund industry today stands at 65 lakh crores. I started markets about 25 years back. And at that time, debt mutual funds were roughly 3 times equity mutual funds. That was the size. Today, equity mutual funds are about 60% of the entire mutual fund pie and rising fast. How are they rising fast? SIPs. SIPs last month were about 23,000 crores every month. This is the kind of capital that's going into the markets today. A lot of you are reading these this news in the newspapers. Of course, all I'm trying to do is to put facts in place so that I build a narrative for you and have you take a judgment on it. Next slide, please. So when you put so much money into the markets, what really happens? I told you in the second last slide from now, the capital that's been put by DIIs, the capital that's been put by retail investors. And in the last slide, I told you how much capital is coming from SIP. I told you that the SIP AUM today is 1/5 of the overall AUM. Yeah, that's big numbers. But how is that translating into actual ownership? Look at the red line there. Look at what's happening in the red line there. that dotted red line, that's how mutual funds are putting in capital into the market. That is how their ownership is rising in the markets. And where are foreigners? You see foreigners, they are flattened out. They're still larger. They're still larger than mutual funds today, but they are flattening out. And Indian households today own about 18.8% of the market. 18.8% between themselves as retail householders and mutual funds. When you add both of them, 9.6 and 9.2%, you get 18.8% owned by Indian households of the $5 trillion Indian market. In rupee terms, since all of us talk about $1 trillion, but we have to actually finally deal in rupees, this number is 432 lakh crores. So 432, 000, 000, 000, 000. Yeah, 432 followed by 12 zeros. Compare that with India's GDP, 297 to 300 lakh crores. So the market, I told you, is about 1.3x the Indian economy, the GDP every year. But households own 18% of that. That is something. So this is about 27% of GDP today, and this is about 14, 15, or about slightly higher number of their financial wealth. Two things there. There's a long way to go in terms of allocation, and this itself is significant. The wealth of Indian households is something that I'm trying to portray out to you here. Indian households today, this is the size. And look at the second point here. It's not as if Indian households are very few. The number of companies that have more than 50,000 shareholders, the number of companies that have more than 50,000 shareholders are 45% of all the companies today. So Indian shareholding is very widely dispersed. The number of Indian investors has crossed 10 crores. In August, we put out a press release. The number of Indian investors today is more than 10 crores. I told you Indian population is 140 crores. When I began my career, India had about 1 crore investors. For 10 years, 15 years, it was only 10 years. So NSE started in 1994. It took about 20 years slightly around that number to get the first crore investor. The last crore, from 9 crore to 10 crore, was 5 months. Every day, about 80,000 new investors are coming to the market. The number of investors that trade in a month is about 1.57 crores every month. That's the kind of money. And it's not just trading, it is about investing. The idea is to build wealth over a long time. The idea is to be disciplined about it and watch your wealth grow. All of us would have heard about companies where you could have bought the bike or you have bought the share. I can't take the name of the company, but you get the idea. So the idea is the long term, and long-term investment has led to this. The number of companies that have 10 lakh investors today is 55. India has 55 companies that have more than 10 lakh investors. These are not numbers that many, in fact, most countries in the world can boast about. Next slide, please. Yeah, very quickly, NSE and market participation. Next slide. You know about these numbers, about NSE, first exchange, first depository, multi-asset exchange. Next slide, please. Yes, this is about us. So as economists, we see three parts in the economy: the government, large corporates, and households. That's us. So India today has 10 crore investors. Between those 10 crore investors, there are 19 crore accounts, because each of us can have multiple demat account, trading account, and so forth. Where are these investors from? Here. Maharashtra is 1.7 crore investors. Amchi, Mumbai. Second is Uttar Pradesh, 1.1 crore investors. For the longest time, Gujarat was the second highest, but which Uttar Pradesh has done very, very well in the last 10 years. Third is Gujarat, 87 lakh investors. And then Rajasthan and West Bengal are neck and neck, 57, 58 lakh investors. And all this doesn't add up to 10 crores. Yeah, so the rest of the country also has. So if you look at this, North has about 36% of all investors. West, primarily Maharashtra and Gujarat, has about 31% of our investors. The rest of us are here. And who all are these investors? Some more profiling for you. 1 in 5 investors is a female today. 1 in 5 investors is a female. Yeah, not great numbers. We should be doing better. But this is much better than what was the case even 5 years back. So a lot of women are joining the markets today as investors, which is a good thing. Remember, it's about investing. It's about growing wealth over the long term. And there have been several studies that women, when they are in charge of household finances, they do better in terms of household welfare. It is very, very well established from number of research studies. And in terms of age, nearly 70% of investors are less than 40 years of age. Not like me, the young guys. I belong to the 31% number here. And even 5 years back, this number was significantly different. So what has happened is a lot of young people, 20 to 30 years of age group, have come to the markets. I hope they invest carefully. I hope they invest wisely. As we say, soch kar, samajh kar, invest kar. That's the entire idea. And one other thing you should know about the markets, 90% of investors contribute to a very small amount of the turnover. So if you see, about 90% of investors trade less than 10 lakh in a month. 2% of investors trade more than 1 crore in a month. So in finance, we call it a skew. The Indian market has a very long skew, a very long tail. Next slide, please. That's it. This is around my last slide, about the last slide. So the last crore, as I said, we got in 5 months. It took 25 years for the first 4 crore investors, and see what has happened then. Investors have really picked up in the markets. And I was the phone guy. I'm the phone guy. You guys are the mobile phone guys. That's the difference. So, and about females, the growth of females versus males in India is today nearly 7 times. That's the kind of speed with which women are coming into the markets. Next slide, please. Thank you. Good for questions now. Thank you.
Sir, please, center stage is where you belong. Dr. Patnaik, I have a complaint for you, unfortunately. The complaint is, you have caused a stampede here. If you would have stayed on stage a little longer, you would be sharing the stage with a lot of Money Expo patrons. Sir, I request you along with me to give a big round of applause to the patrons of Money Expo. They've been standing throughout your segment. Thank you so much for the love. Thank you so much for your presence and your time. Oh, I love this gentleman. He's like, okay, done. Thank you, sir. Thank you so much. So you mentioned India shines bright. It is because of leaders like you. And of course, all the leaders in front. Dr. Patnaik, I have one question to ask. My question is, what is that one quality that you had, that you identified in your childhood itself, that you knew that you were destined to become the chief economist at the prestigious National Stock Exchange? What would that one quality be?
I had no idea. Absolutely being honest with you, I had no idea.
One quality?
No. I'm just a middle class guy, just studied very hard. That's it. That's the story of all of us.
My God, Dr. Patnaik, let me answer on behalf of Dr. Patnaik. It is humility. Sir, humility is the answer. Thank you. Thank you so much for your presence, sir. What a fantastic segment
Thank
that
you,
was.
everybody.
Again, a big round of applause for the absolutely humble leader, Dr. Patnaik. Thank you so much. My God, I am overwhelmed with the presence here. Fantastic. Love your smile. Love the energy.